Hello, my viewers. You are welcome to Covenant Academy. For today, we are going to be looking at trading accounts. Okay, so look at the lesson objectives or learning objectives. The first on the list is the definition of a trading account. What is a trading account? It is an account that is prepared to ascertain the level of gross profit or gross loss achieved during a particular accounting period. Okay, so every business organization, sole traders, will always want to know if during the accounting period it is gross profit or gross loss. So that is trading account. Now, the second on the list is calculation of a net sales. Calculation of a net sales. So for a trading, organization, you sell. Okay. Now, there is a way to calculate net sales. To calculate net sales, look at the formula. To calculate what? Net sales. The formula is sales minus return inward. What is return inward? Return inward is the monetary value of goods returned to who? The seller or to a firm, to an organization after some goods were sold. Now, why would those goods be returned? It could be because those goods sold to the customer were not in good condition. Okay? Now, to calculate net sales, as I've said, it is what? Sales minus what? Return inward. So the monetary value of goods returned is the return inward. Okay? So now, the next one is calculation of what? Net purchase. Calculation of net purchase. How do we calculate net purchase? How do we calculate net purchase? Now, this is what? The formula is purchase or purchases minus return outward. Minus what? Return outward. Okay, so now, what do you understand by return outward? Goods return to the supplier, to the firm, to the organization by a customer is a return outward. So for you to know the actual purchase, it has to be deducted from the what? Purchases. Okay, so to calculate net purchases is what? Purchases minus return outward. Do you have any question? Please, on the comments, I want you to drop your question. On the comment, I want you to drop your question. We need to know how to calculate cost of goods available for sales or goods available for sales. Okay? How do we calculate goods available for sales? How do we calculate goods available for sales? Okay? Now, goods available for sales. How do you calculate this? Goods available for what? Sales. Okay? Now, to calculate this, you need to consider your opening stock. Opening stock. Okay? Add purchases or net purchases. Add net purchases Now, in the question, if there is no return outward, it will just be ordinary what? Purchases. In the question, if there is carriage inward, you will add it. Add carriage inward. Okay? So to calculate goods available for sale is what? Opening stock plus purchases or net purchases, then plus carriage inward. If in the question you have carriage inward. Okay, now when we say opening stock, what are we talking about? Opening stock is the stock for a trading organization. It is the stock, the monetary value of the stock you are starting the new accounting with. Okay, that is the opening stock. Okay, I've explained net purchases. Now, carriage inward. Now, as an organization, you are into trading. You go to the north and buy some farming products. Now, you need money to move. You spend some money to move those goods after you have purchased them down to wherever your warehouse is or your store. And that is what? The cost of moving, of transporting those goods down to your warehouse is known as carriage what? Inward. So it has to be added before you can get what? Goods available what? The cost of goods available for sales. Okay, do you understand that? So we are still going to look at figures to calculate this, all this. So the next one is what? Calculation of what? Cost of sales. How do we calculate cost of sales? How do we calculate cost of sales? How do we calculate cost of what? Sales. Once you have gotten your goods available for sales, once you have gotten your cost of goods available what? For sales, cost of goods available for sales. Once you have gotten this, what do you need to do? You need to what? Less you deduct your closing stock. Deduct your what? Closing stock. For you to get cost of goods, to get a cost of what? Sales. Or cost of goods sold. To get cost of goods sold, it is goods available for sales less closing stock. Or simply say, to get cost of goods available, to get cost of goods sold, it is opening stock plus net purchase plus carriage inward minus closing stock. That's how you are going to get your what? Cost of goods sold, cost of goods sold, or cost of sales. Okay, so now I want you to drop your question. Okay, I want you to drop your question. If you have any question, I want you to drop it. The next thing is for us to learn how to calculate gross profit or gross loss. When next we meet, we are going to look at that. Also, we are going to pick questions. Okay? We are going to pick questions or a question on this particular topic. We will solve them together. Okay? So I want you to comment if there are things you still want clarification on. Okay? So under the comments, I want you to write those things. Then if you find this video useful, I want you to, subscribe, share, like, and also turn on the notification button. Inform your friends, okay, who would like to know more about trading accounts, also other accounting related topics we are going to be treating. Okay, so thank you.